Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Wednesday, the 3rd of September, and starting off with the S&P, which gapped down through the floor of the rising trend channel we had there, the red line there, that was around 64.20. Below that, we had the risk of a move down to the 50 line, 63.25, which I suppose is still there, while we are still below the 64.20 level. Worst case at the moment, probably a test of the 6200 area. And I suppose looming is the potential floor of the rising trend channel from April, but that's way down towards 6,000. So at the moment, just looking at the 50-day line really as potential support, and that would be the first time it would be touched if it's touched early this month since the beginning of May. The Nasdaq is next, and here we've, as you would expect, also seen a breakdown back down to the 50-day line. This is the first time since the beginning, or actually the end of April, that we've been down below there. So that is quite a development. It also suggests that we've got, with the RSI below neutral 50, we've got the risk of further declines towards perhaps 22,600, which is post-July support, while we are below the top of the gap there, 23,300. In the end, it can be seen that negative divergence that we had from the middle of last month really has actually kicked in for this market. But the ideal scenario now is that we bounce from current levels and then resume the uptrend or the recovery that we've had since April. The best case at the moment, 24,500. If we can stay above the 50-day line, just near current levels, just below current levels at the moment. Moving on to the stocks, and quite a few fireworks at the moment. The first one is one that's actually followed through on our previous call here. The top of the channel there for AirNet was around the $4.70 mark. And while we're above that, we're looking for a fresh leg to the upside. And that could be the upper parallel of that rising trend channel from back in March, as high as $8 by the end of this month. And obviously, like to see the $4.70 area maintained. We had a double RSI 50 rebound there, so that was a double leading indicator on the upside. Moving along to Carver, and here you can see that we've gapped up within this rising trend channel, which exactly where the top is. One is probably up to debate at the moment, but at least while we're above resistance on the way down there, around the $2.28 level, we are looking for up to $3 there at the top of that channel from October the last year. Ideally, we stay on the right side of $2, whatever happens. On to a situation which hopefully will have legs over the near term, which is obviously what we want with the chart breakers. Cytokinetics, massive unfold gap to the upside through the 200-day line there at $41. Above that, we're looking for $60. By the end of this month, or hopefully much sooner, which would take the shares back to basically post-summer 2024 resistance. And the stop loss, obviously the low of yesterday, $45 on, well, $44.93 on an end of day close basis. Very pleased to see the next stock go through the roof, which is HWH. And here it's the second target we managed to break. The first one was 320, the second one up to 650, which leaves us looking for a fresh leg to the upside, or a fresh level. But perhaps given that we actually are still below 650, we can wait for that for later this month. Maybe one could say that the actual real target here is now up to that level, which fits with the last resistance points there. Ideally, we stay above previous resistance and the old peak there we had at the beginning of the year, so around the $4 area, so above $4, looking for up to $8 by the end of this month or sometime during this month. Stock which is not so familiar is Ionis, and here you can see that we've had a massive gap to the upside through old resistance, through the $50 area, the old peak there around 52.50. Above that, we're looking for up to $80 by the end of this month. Obviously, that will take quite a lot of effort, but it does look quite sort of hopeful at the moment in that respect. Situation which couldn't resist adding to the list today is Katapult, largely because of the name, but also because of the rising trend channel here. We've broken through recent resistance around $16.40. Above that, looking for the top of the channel there as high as $30. by the end of this month. And another situation which may be of interest to the bulls at the moment is Novabay, and here you can see that we've had this vertical move. Bit of a tough guess as to where exactly the trajectory is, but at the top of the channel, notional channel there from April, as high as $3.70, and looking for that by the end of this month, while we remain above the previous session's peak there at $2.15, so above 215, 350 plus on Novabay. A nice setup coming up on the next situation, SmartKem, and here the reason for the enthusiasm is we've got a broadening triangle base, top of the triangle there, and the target $3.10 plus. We're looking for that while we sustain the 200-day moving average around $2.20, so above that. But it should be on track for a $3 to $3.50 target later this month. On to the last three. The first one is certainly a new one for us here, Yoshiharu, and here a falling trend channel, but the top of the channel there and the 200-day line there at 231. Bit of bullish divergence, so it's a bear trap gap reversal, so that gives us more hope that we're on track for a target towards $2.50, which was basically the summer resistance for the shares. RSI now back above neutral 50 as well, just. So above recent resistance around 150, looking for $2 to $2.50 on Yoshiharu. We have also a bit of excitement at Zhengye, and here we've covered the stock many times. Rising trend channel, narrowly rising trend channel, rising 50 and 200-day lines, RSI 50 rebound. So it looks as though the top of the range and the top of that rising trend channel around $15, or actually more, $14 to be precise, is a done deal, especially while we're above the $10 zone. Bit of a wide sort of parameters there in terms of the stop loss, but that's about the best we can do given that there's no real resistance between $10.40 and the recent peaks in the spring. Finishing off with Zentek, and here we managed to puncture the 50 and 200-day moving average areas, but didn't manage quite close above the 50-day line. End of day close above that 50-day line, 91.97 could be a trigger for a retest of the $1.20 area, hopefully sometime in coming sessions. That's it for me today. More updates tomorrow.